Good afternoon and welcome to this edition of Finweek Money Matters. Remember, this is the show that helps you manage your finances. I'm Dumisho Greater. Coming up on the show today, we take a look at a whole new way to learn how to drive. I can say I do wish we had this app before I learned how to. And we discuss the outlook for Sasol and Reinet Investments. We're also joined by a panel of experts who will share their views on what it takes to become an asset manager. But before we get into all of that, do remember that we welcome your comments, so email us to moneymatters@abn360.com. But first, let's take a look at the trend of the week. Learning to drive can be intimidating and expensive. This is something that Datsun South Africa is addressing through innovative technology that will get you comfortable behind the steering wheel before you ever venture out into the traffic. Joining me in studio to tell us about their new driving simulator is Fenner. He's the general manager at Datsun. Des, thanks so much. Like I said before, I really wish that we had this simulator before I learned how to drive. It could have saved me a lot of heartache. But tell me, how does this actually work, and how did Datsun come up with this idea?
Well, I think it's really Datsun's holistic approach to safety. And we all know that driving or road conditions, weather conditions, and the roadworthiness of the car, together with driving skills of individuals, are the main contributors to our hugely or high road or level of fatalities in South Africa. So we felt with Datsun, and our approach is to get first-time car owners, buyers into Datsun Go, and then step up into other products. It would be a great idea to provide driving skills, and our Go simulator is our first step in making sure that drivers are better equipped to be better drivers on South African roads and conditions.
So this would be similar to what a pilot would do before they start flying a plane. So what exactly does it simulate? You getting inside, behind this wheel, putting on your seatbelt, what else can we expect?
To me, exactly. It's a very similar process. It will never take away the actual driving experience, but what the simulator does is you get the feel of being in a real live Datsun Go. You sit in the seat, you put on your safety belt, you go through all the K53 legislated. I think you would have experienced that. So you follow all of those, and at the same time, the simulator measures your eye coordination with your side mirrors, your rear view mirror, the hand controls, indicators, where you put your hands on the steering wheel.
Yes.
And it records all of those during simulated tests through 12 modules that make up the K53 driving test. So the instructor who stands behind you during this experience, not to intimidate you, but actually helps and coaches you through that environment. And I think it gives you a better feel in that environment, that you're not on the road, that you're in an enclosed area in a Datsun dealership. So
is this available yet? When can we expect this to be rolled out, if not?
The first one is produced, so our prototype is there. We're producing another 10 simulators. They'll go into 10 of our dealerships, and over the next couple of months we're going to test. We're going to invite people to come in and get their simulation experience, and then do the actual tests in a real live Datsun Go, get their licenses. And we believe the take-up will be good, and then we'll extend it to the rest of our 60 dealers countrywide.
I'm sure insurance companies will be quite happy with you. It'll keep their costs down. But in terms of costs, is this a free service or not?
I think in costs, what we're trying to do with Datsun, in line with our product offering, is affordable motoring. We want to make driving skills a reality and make it affordable. So our whole stance is to try and make it 50% of the cost of what you would get in a current normal driving or learner driving experience.
Des, thank you so much for telling us about the simulator. Definitely am looking forward to it. That is a big thank you to Des Fenner. He's the general manager of Datsun. Let's now take a look at our punt of the week. South African investors have always paid attention to companies where the Rupert family holds an interest or have management control, and Reinet Investment is no exception. Joining us from our Cape Town studio to discuss the outlook for Reinet is Finweek contributor Moxima Gama. Moxima, thank you so much for joining us. Tell us your stance of how you feel about Reinet currently.
Look, Reinet was the share price was quite stagnant for some time, and it was a bit frustrating to actually follow it. And there could have been a breakout in either direction, but it did break upwards recently, actually just this week. So it is showing a bit more upside that could go to at least those 31 levels and even above. I actually think it would remain bullish for the rest of the year. Next year might just be a different story because it could be overextended, but for the remainder of the year we could see a lot of upside from Reinet, from the current breakout we've seen it go through.
Moxima, considering that Reinet, the majority of the stake, about 70% of it, consists of British American tobacco, why not just go straight and buy BAT?
Look, you can have both of them in your portfolio. I suppose what you would do is play around them using the relative chart and looking at what is outperforming and underperforming and do a switching strategy with them. But effectively, Reinet is much cheaper than British American tobacco, so you would probably err on that side. But it is you would definitely have both of them in your portfolio.
And in terms of BAT still being seen as very defensive, just talk us through that.
Well, look, it's in a very lucrative industry, and this industry escalates by at least 3 to 4% yearly, which means BAT's at least earnings will always be between 3 and 4 as well. So they increase alongside that, and it's unfortunately it is in an industry where it does fulfill an addictive urge. But what also makes it quite outstanding with BAT is that it is trying to reinvent itself. In other words, accommodate the people. The people want to leave smoking with their e-cigarettes. So it does it does give a very lucrative story, or it has a lucrative future. But like I said, next year it might, despite any good information, it would be a bit overextended. So that's why, if you are looking at Reinet, you would follow it alongside with BAT because of its financials and the positioning it is in terms of industry, country, or even continents.
Moxima, thanks so much for that. That was our Finweek contributor, Moxima Gama. Up next, we unpack this week's cover story. Sasol produces a third of South Africa's fuel from coal and gas, and its fortunes is therefore very closely tied to the oil price, with the price of crude at about half of where it was a year ago, and Sasol on an aggressive expansion drive. Well, we're joined by Finweek editor Jana Marais to take a look at the future that is held, or what the future holds for Sasol. Jana, thank you so much. Sasol's dealing with a lot, but as we mentioned, oil price is key. So what are the other factors that we need to consider when it comes to Sasol at the moment?
Yes, I think they've been very much protected by the rand-dollar exchange rate, which is obviously a key factor for them as well. And it's been an interesting week with what's been happening in Iran, so I think everyone will be keeping an eye on the oil price. But I think the two other big things is the expansion drive, as you mentioned. I mean, they're planning really to bet the farm in the US on cheap shale gas, use that as a feedstock for a chemicals plant, which they've already given the green light to. And then also for gas to liquids plant, which they've kind of frozen that decision for now, given what's happened to the oil price. But they're going to spend basically their market cap on building these new projects. I think the other thing is the CEO leaving, and he's been overseeing this massive restructure at Sasol, plus this expansion. So I think there's a few question marks about him deciding not to renew his contract when it expires next year.
Just a very quick one though, Jana. At an oil price of below $60 a barrel, they've got all these expansion plans in place. Is it still feasible?
Look, I think with the chemical plant, I don't think people are too skeptical about that. I think the real concern lies with the gas to liquids plant, which is what they've kind of delayed that decision anyway. But I think generally the market is quite skeptical about GTL, just because it's such a complicated thing, and the track record of companies and Sasol's own, their plant in Qatar, for example, massive budget overruns, massive delays, and not only Shell had the same experience in Qatar. So people are skeptical, and I think Nedbank's calculations they really would be more comfortable if the oil price is sitting around $90 a barrel rather than 60. So we'll see what happens with that.
Most definitely. Jana, thank you so much. When we come back, we'll be talking about asset management. What does it take to be a good asset manager, and how is it that South Africa is still so competitive? Stay with us. Welcome back. You're still watching Finweek Money Matters. Well, South Africa is at the forefront of emerging market asset management with 8 firms in the Towers Watson Global Top 500 survey of asset managers. This is on par with China, which is a much bigger economy. In studio with us to discuss the sector and what it takes to be a successful asset manager is Cabot, Alletzhauser, head of Alexander Forbes Research Institute, and Muitheri Wahome, head of technical solutions at Investment Solutions. Ladies, thanks so much. And of course, Jana is still with me at the desk. Muitheri, let me start with you. It really is a big achievement for South Africa to still be at the top 500, given the fact that we are on par with China. Maybe give us a sense of how it is that South Africa has remained competitive in this asset management space.
Thank you very much. It's an amazing story because South Africa has a long heritage in financial services. So if you look back at the 1800s, we had British insurers coming into the Cape. In the 50s, you have a Pensions Funds Act that enables a strong pension fund industry. In the 60s, you have unit trusts starting in South Africa. We just celebrated 50 years of unit trusts in South Africa. So there have been a number of big pools of assets that have grown in South Africa, firstly because there was an enabling environment. There's been capital markets since the 1880s, and all these things have combined together to build a really amazing story of this small emerging market in South Africa, and one that we can be proud of.
Mm. And maybe if you would like to add something to it, but you always hear asset management and it's said to be one of the sexy businesses. What exactly is it? If somebody says there's an asset manager, what are your key responsibilities? What are the deliverables for an asset manager?
Well, I think first and foremost, it's important to understand that you are legally and technically a fiduciary. This isn't your money, this is someone else's money, and it has been entrusted to you to deliver against a very specific mandate that's very clear to you from the start as to what you're supposed to do. So it's not like, let me give you the money and you go off to the races and do whatever you want. Asset management is about delivering on a promise, or not a promise, on an expectation. That's a better word to use.
I think you're both from quite successful companies, but what does it actually take to be successful in this industry?
I think there are a number of things that will require success, and obviously, for a start, asset managers have got a big responsibility allocating capital to projects or trying to manage money so that they can meet client needs or the promises that they've made to clients. So for a start, they must be able to do that. They must be able to allocate money successfully. If they do that, it means that there'll be good risk-adjusted returns for their clients. It means that clients might be able to grow their wealth. It means that they would be able to grow their pension savings. So they play a big role, but first and foremost, they need to manage the money judiciously. I think the other thing that comes to play when I think of success is anticipating the way clients' needs are changing and trying to meet those needs, given that the environment is also always shifting from underneath their feet. So it's actually quite a difficult thing that they have to do every day, managing money when Greece is happening on the sideline and politics and all these kind of things. But if they're able to do that judiciously and engender the trust of the people who have given their hard-won savings to them, I think they will be successful.
I think the biggest challenge that they face is how do you separate the emotion from what the markets are going to do? So let's talk about Greece. If I was listening to the news, I would go get the heck out of Europe as fast as I could. And yet, from a financial point of view, is that actually the right decision? And how will the markets actually respond to the information of what's going on in Europe at that time? And that is a challenge. So it's not simply about being able to analyze the numbers that makes you a good asset manager. What makes you a good asset manager is to be able to understand how the markets are likely to respond to those numbers when they become available. And as Muitheri says, it's more about understanding what risks you're taking so that you're able to deliver to the expectations of the client and not some sort of nasty surprise.
What have been some of the biggest risks at the moment that are facing asset managers? We mentioned Greece. heard rumblings of China in the background not being taken seriously. That's really said to be the big red flag. So as you know, being in asset management, what are the things that you are looking out for?
I think from where I stand, if you look historically, certainly almost over the last 20 years, the markets have been so strong. South Africans have enjoyed very high inflation-beating returns. I think one of the biggest worries out there is that we might not be able to find those kind of returns going into the future. So how do you deal with a client who's just used to markets going up? I mean, if you think about it, increasing interest rates, if you've been in the market over the last 6-7 years, you've just seen cuts in interest rates. So, you know, there are a number of things that people are not used to if you've only been in the markets for the last 6-7 years, for example. And I think that is a particular challenge, because clients still need those returns to be able to grow their savings pots. But it's likely that into the future, it might be a lot harder to make those returns.
But it's not just that challenge of high returns. It's where you're going to get income and where you're going to get sustainable income. So if I take the risk of high returns, but I absolutely can't take a risk on what kind of income I need to be able to draw every month if I'm in retirement, where do you get that stability out there in a low interest rate environment? I think that's the other great risk that we're facing.
I was speaking to a couple of analysts, I think a couple of weeks ago, about the change in trends, and they said, you know, they're seeing the mindset shift from people that were yield seeking towards growth seeking. Muitheri, would you say that that is what you're picking up in terms of trends and what consumers and what clients want?
I think you see different trends at different types in different types of markets, and markets have been so good, you know, breaking records. So people start to want more. So certainly you do see risk-seeking appetite, you know, that seems to be growing. And sometimes it happens at the very wrong time. You know, often there's nervousness. You know, if the markets are looking so good, what does it mean when you have a strong dollar? What does it mean when you start seeing